Well, welcome everyone, and thanks for your attendance at Citi's roundtables focusing on ESG, environment, social, and governance issues, and innovation around those things. I want a special thanks to our panelists, and I'll introduce them a little bit later. I'm Kevin Murray from Citi, and I will be leading the discussion here. Citi, as I think everybody fully recognizes, is as we like to call it, the leading global bank in existence for over 200 years and has approximately 200 million customer accounts and doing business in more than 160 countries and jurisdictions. Citi's presence in Central and Eastern Europe began in 1985 with our entree. The portal country was Hungary. And since that time, we've expanded from Hungary into Czech Republic, Slovakia, Romania, and Bulgaria. In addition, we also cover our Baltics and Balkans out of our franchise in Hungary. So moving on to what we really want to discuss today is, as I mentioned, the ESG and innovation. And over the past few months, in the midst of our global health crisis, some have questioned the connection between sustainability and the broader issues weighing on our society. But if you take one lesson away from these intersecting crises, it is that our physical and economic health, our sustainability and resiliency, and social justice are inextricably linked. Our communities begin to look at their recoveries and aim to rebuild. We see the parallels between COVID-19 and the longer-term climate issues. We know the cost and disruption of managing the crisis will only increase the longer we delay. And that collective action is needed to address climate change head-on. Even under the current constraints, we recognize the need to accelerate the transition to low-carbon economy. ESG and climate change are already gaining incredible recognition as key business strategy issues prior to the pandemic. What has been really interesting to see is how the pandemic has cemented and in some cases accelerated climate change interest from investors and clients. The type of economic disruption that we are feeling from COVID-19 is a vivid demonstration of the type of economic disruption that climate change is likely to cause. So without further ado, let me introduce our panel. Jason Channell, Managing Director and Head of Sustainable Finance within Citi Insights. Jason has just come in and created this organization that we have, Citi Global Insights Division, which is designed to provide thought leadership, content, and insight to the full breadth of Citi's client base. Jason previously built and led Citi's sustainable and responsible investment research team from within Citi Research, which was ranked #1 around the world in the Institutional Investor Survey. We also have Mirela Covasa, Chief Financial Officer of Nepi Rockcastle. Nepi Rockcastle is a commercial property investor and developer focused on CEE. The company acquires, develops, and manages assets, being the largest CEE retail property owner, currently present in 9 countries. Geographies covered are Romania, Poland, Hungary, Bulgaria, Slovakia, and Croatia, Serbia, and Czech and Lithuania. Nepi owns a portfolio worth about 5.8 billion euros, representing 2 million square meters. And László, György, State Secretary from the Ministry of Innovation and Technology, the Republic of Hungary. The Ministry for Innovation and Technology aims to rethink the development of the Hungarian economy with a focus on innovation. The future-oriented strategy of the ministry aims at successful adaptation of global trends by building on the characteristics and strengths extant in the country. One of the key tasks of the ministry is to genuinely translate to state bodies the feedback and needs of economic operators on the basis of experience that is as direct as possible. Martin Novak, Chief Financial Officer and Chief Operations Officer, ČEZ Group. ČEZ Group is an established integrated electricity conglomerate with operations in a number of countries in Central and Southeastern Europe and Turkey. Headquartered in the Czech Republic. It is one of the largest electric utilities in Central and Eastern Europe with over 8 million customers. It is also among the top 10 European utilities. The group is active in electricity generation, distribution, both regulated and unregulated, and gas sales and coal mining. And last but not least, the Chief Executive Officer and founder of Software Group, Kalin, Radev. The Software Group is a global technology company specializing in digitalization and integration solutions for institutions that provide financial services. Founded in 2009 and headquartered in Sofia, Bulgaria, it currently serves a worldwide client base from 9 regional offices located in Australia, Bulgaria, Egypt, Ghana, India, Kenya, Mexico, the Philippines, and the US. Some of Software Group's customers are organizations such as the Bill and Melinda Gates Foundation, MasterCard and MasterCard Foundation, International Finance Corporation, World Bank, Asia Development Bank. Ladies and gentlemen, thank you for offering to join us on this panel. So let me start off with just a very basic question, and I'll toss it over to Jason. Jason, how do you size up the state of the union in ESG and innovation at this point in time? What does the landscape look like for us now, and maybe up into the medium term?
Well, thanks, Kevin. My thanks for having me on. I just really wanted to echo some of the points that you made earlier. I mean, the world has changed beyond all recognition in the last 12 months, slightly more than 12 months now. And I think a lot of people assumed that sustainability was a classic sort of top of the market fad, which once the chips were down would disappear and people would go back to just thinking about traditional capital preservation, etc., and they would kind of, if you like, worry about saving the world another day. In fact, exactly the opposite has happened. It's absolutely cemented ESG and sustainability as a fundamental part of the economic backdrop, and I think that was the big change really last year, is that it's certainly, as I say, a fundamental part, and it's here to stay. And within that, one of the biggest changes was that we saw the rise of S. So historically, there's been a very, very big focus on E for a variety of reasons. I think partly because the main reason probably is just it's a concept, climate change, people can get their heads around. Also, you can count carbon, you can put a price on it, tons of carbon, it's a concept. But a lot of the S stuff, the social stuff, is much, much harder to quantify and to pin down, particularly in an economic sense. But this rise of S, it's pulled in so many different things, like the implications for poverty around the world, the fact that it's exacerbated inequality. We've seen huge implications, obviously, for education around the world and the inequality within that, but also within a corporate and an economic sense, what it's meant for employee rights and pays, and what duty does a corporate or indeed the state have to its citizens and its employees. I think one of the other things that's really jumped to the fore is that we often look at a lot of these sustainability related issues like climate change that you mentioned and say, well, that's wonderful, but we can't afford to do it. In the space of 3 or 4 months last year, the world managed to magic up about $15 trillion of stimulus, and we're still counting. So the argument that the money's not there and we can't afford it is very hard to make now. Now, clearly, balance sheet expansion can't go on forever, but it does show that if we really need to find the money, we can. And I think it probably shines a light on the fact that it would be a lot cheaper to deal with these things in advance than it would necessarily reacting to them afterwards. I think one other point that comes deeply to the fore is the concept of corporate purpose, because one of the things we didn't have time as a society to look at bailouts and go, I'm going to bail out that industry, but not that industry. That's a good industry. That's a bad one. It was a blanket approach to stimulus. And that really shines a light on this concept of corporate purpose. So if we're saying that a corporate is worthwhile being bailed out by society, it must therefore serve some purpose and offer some benefit to society. So I think defining that is becoming more important, and companies thinking about, what is their purpose, what impact do they have on society and the environment around them. And this concept that's been around for a while of sort of a broader stakeholder model and stakeholder alignment is coming to the fore. and this concept within corporate purpose of societal license to operate. Now, all of these changes at a governmental level and a corporate level are being mirrored very, very much in the investor world. We've now seen the assets under management pass, that is ESG screened, pass about $40 trillion globally, which is obviously an extraordinary sum. The assets under management of institutions that have signed up to the UN's PRI, Principles of Responsible Investment, is now north of 90 trillion. So, anybody that thinks this is still a niche activity is very much living in the dark ages. But what we're seeing with investors is we're moving from a backward-looking approach of sort of a box-ticking exercise of ESG scores, much more to this sort of impact-related, corporate purpose, forward-looking focus on materiality of factors and a focus on longer-term returns rather than the sort of short-term myopia that we've very much seen in historically in financial markets. It's led to a proliferation of all sorts of new instruments, from environmental impact bonds to KPI-linked bonds to green equity, etc. All of which is investors putting money into more sustainable businesses, which arguably are less exposed to systemic risk, like pandemics or climate change, etc. And we are seeing, obviously, as a result of that, provision of cheaper capital to lower risk, more sustainable businesses, and should we say, a more very early stages but better pricing of longer term systemic risk within corporates. That has a big implication both for governments and for corporates in terms of reporting, and broader reporting in terms of what's often called non-financial reporting, which don't get me started on that. I don't like to think of it as non-financial reporting. I call it pre-financial reporting, because all these things ultimately come out in the numbers. And just to sort of bring all that together, so to go right back to the beginning, rather than it being the death of ESG and sustainability, we've really seen this pandemic focus attention on systemic risk, the potential cost of it, and what the position in the financial ecosystem and the societal ecosystem is of corporates and governments, etc. So it's a fundamental part now of the economic complex.
Let's jump over on the government side. What is the role of government in encouraging or advancing this technology or innovation, if you will? László, would you want to take up on that from a policy perspective or from an actual practical perspective?
Yeah, thank you very much. Actually, I would reflect to what was said by Jason. I really enjoyed his presentation because actually the government's economic policy role is, per definition, to create balance between business interests and the interests of the citizens. And I'm very happy to hear that the business approach is moving from the neoliberal approach, which can be best described by Milton Friedman's theory, who said that the only motive for a business is to create as much profit as possible, and you do not have to take care of the stakeholders that much, because automatically the mechanisms of free markets will actually do the job. And it turned out that it is not doing the job. And I'm very happy to hear that we have partners in executing our economic policy goal. So we here in Hungary are very much keen on creating a sustainable society, which means environmental, economic, financial, and demographic or societal sustainability is our main goal here in Hungary. And to your question, reflecting to your question, I do believe that in this goal, achieving this goal, governments can do a lot by helping, encouraging, advancing innovation, because innovation can create monopolies as well and oligopolies as well, but innovation can create new opportunities, possibilities for the citizens, for the business sectors, on the fastest way to become competitive players on the world markets. So that is why it is very important for us that the world considers us as a creative nation, because our language is very unique and very difficult. And that is why some of the investors who came to Hungary say that we think a little bit differently, and we are kind of problem solvers. And they are keen on bringing here RDI activities because of the difficulty of our language and the way of thinking, and the different way of thinking. Plus, we believe that we created such an ecosystem here in Hungary, and we are creating such an ecosystem which fosters the creation of such kind of, we call it university-based research and development and innovation ecosystems, on which this different way of thinking and problem solving, combined with global companies, reach to markets and reach to problems. So this can create a very innovative environment. That is what we are working on. I hope I answered your question, because I believe so.
Yes, I think you did. Thank you. Martin, if I can ask you from the other side of it, what do you expect from governments with respect to supporting this, the innovation and the ESG concepts that we're trying to strive for?
I think it is important for the governments definitely to support the innovations through maybe various support schemes. But on the other hand, corporations also kind of need sometimes less regulation than more. So basically less regulation that kind of helps actually innovative potential to thrive, because many innovative products are born from the pure market need of those things and ideas that are brought by bright people who are allowed to do what they want to do. But definitely, if there is any way how to support, especially the very young companies, startups, that's definitely helpful. We do something similar. We actually have a venture capital fund that is called Invent Capital, about 200 million euro fund. We also manage other institutional money in our fund, and we support those companies, but truly not the very startups, but those who already have a product, who have a potential future, and we really do behave like venture capitalists. So we expect some return on our investment, but also we exclusively invest into innovative companies only, and ideally those that have something to do with energy. Although many of those might be, for example, from cybersecurity spectrum, which has something to do with energy as well, or managing grids, or companies that actually manage charging stations for e-mobility and so on. So I would believe that there is definitely needed a governmental support for the very young startups, but then as little as possible of barriers for doing business.
Thank you. By the way, if anyone wishes to chime in on a point on any one of our questions, feel free to do so after someone has stopped speaking. And this is an open panel discussion, so I want to make sure everybody's aware of that. But thank you for that, Martin. Let me ask just more broadly, perhaps Kalin, how do you see the immediate long-term impact of COVID-19 on the speed of technology adoption and sustainability? How has it changed our industries?
Thank you for the question. Actually, of course, everybody are talking about the COVID and the impact and when it's going to finish. But what we see in the financial sector is quite inevitable. Things are happening, and COVID actually speed up processes that have been going already with a pretty good speed. But now everything is kind of moving so fast, and we are even kind of witnessing process that were planned to be done for years, how they're happening in a few months. Of course, the the effect to the financial sector is tremendous. Mainly, my personal opinion, because the psychological barriers that was keeping the customers away from digital for years sometimes suddenly vanished, and in a matter of days or months, at the global scale, there is actually huge impact. And the most important is it doesn't seem anyone will go back to use the usual kind of methods before. So because of that, the digital transformation basically become an immediate priority for everybody. It was kind of a rush initially, a little bit chaotic, but currently, actually by now, most of the financial service providers already kind of moved to the next stage, taking a strategic approach, having good strategies and plans how they're going to go about digitalization. And especially for an element that we joke among us and the clients about something called future-proof digital path. So in all their strategies, they're looking to make sure that if the world gets crazy again and there are sudden changes for whatever purpose, they are going to be able to respond with their digital solutions to those needs. And of course, the kind of the directions where this is all going, probably you have seen so many reports from McKinsey, Financial Times, and etc., where a lot of banks are taking actions. Let's say just for the third quarter of 2020, 80% of the Santander Bank in UK were completed digitally. Actually, their video calls in the bank from 100 per week, which was kind of the average number before the pandemic, let's say in January, they went to 9,000 per week. So things like that, you can imagine, are actually going to change how the ways are handled. Of course, huge reductions of branches and ATMs, a lot of things that are happening on actually on the cybersecurity side, on the how the adoption is taken, but the effects are all in one direction. And as I already said, there is no turning back. The direction is very clear. Always digital, and we call it wherever there is a phone, there is a bank kind of approach. So the expectations are more and more in much faster terms than we expected. Everything will be happening from the mobile phone. And I want to make one clarification. Many people, when they talk about digital, they typically talk about the retail banking, the end customer as individual, that they will do the things from the phone. But immediately after that, of course, this is the first wave to take care about those type of customers. But what we are seeing is that immediately after that, all the SMEs, corporations, and etc., they're moving quite a lot of their operations being done by the phones, tablets, and sometimes machines. So it seems the world is really going digital, at least in the financial side of it.
Thank you. Mirela, you have a different industry. However, your portfolio, your reach is quite wide. How do you see the industry changing with respect to the same question?
Yes, it's certainly an acceleration of the trends that we've seen already before the pandemic. As far as our business is concerned, what we can see is that people are certainly more, let's say they are still mobile and eager to interact, although such freedom has been restricted quite a lot in the last year. But we believe these tendencies are part of the human nature, so they're here to stay. And what we can do is to create an even more modern shopping experience, relying on the emerging preferences and to consider our shoppers' concerns. So in this respect, we are working on many initiatives. Indeed, we have been working in the past and have already launched some of them, but I would clearly say that our work has been accelerated by the pandemic. And I expect, for example, some of the trends like, I don't know, cash purchases to become the norm in a few years, maybe even self-checkout in most of the stores. We are working on AI-enabled personalized shopping experiences via loyalty apps, also in store. This type of experiences are expected to grow. And generally what we're doing is looking at China or Asia to see the future. And we actually have Chief Digital Officer that was hired just a few months ago. She has a tremendous experience in Asia and has brought quite a lot of ideas. So for sure, the industry is changing, and we need to adapt if we want to stay ahead.
Thank you, Mirela. Martin, anything from your side?
I think in our case, it is very much true as what has been said already. Exactly the case of Bank of England, Central Bank, and the same with us. Video conferencing was kind of used from time to time, but really people preferred travel, both inland travel, but also foreign travel. Even for short meetings, it was kind of a norm. I think this is over. This will never come back, which is definitely a good thing from cost perspective. Of course, from time to time, people will need to meet together, especially for some brainstorming sessions, doing new business. It's hard to do over video, but and many other initiatives in our company have been accelerated. Kind of contactless, contactless actual experience of our customers, trying to do everything digitally, not in person. That's clear. This is something that will stay with us, and we are happy that in certain. From certain point of view, actually, the situation that we are facing today has accelerated all those things by years. This would normally take years. I talked to one of the CEOs of the banks, and they had a 5-year project prepared to convert last 200,000 customers who were kind of not digital. They didn't want to switch to digital, everything in person, retail customers, of course. And in spring of this year, basically, they could cancel the project because within 2 months, most of those 200,000 remaining kind of non-digital customers finally converted to digital world, and the project was over. So all the negatives have also some positives from time to time.
Thank you. László, how do you see, with respect to the financial community and supporting ESG, how do you see them playing? Are they leaders? Are they followers? And what would you like to see them do?
Very good question. I see them being very active in communication and as we heard, in digitalization. And while they are digitalizing, they are taking a very important part of reaching such segments of the society as well, which were unreachable before. So that's how they're contributing to the sustainability of the society, or lifting up people, and also to environmental sustainability. What I see here in Hungary that, not by their own, but with some help of the government, they contributed to sustainability of the Hungarian society after the 2010 crisis. And I believe that can be followed in other parts of the world as well, through some transaction taxes and some excise taxes. They contributed to the crisis management, which helped us to create a work-based society here in Hungary, which helped to blow energy and oxygen into the Hungarian economy. Of course, these taxes were decreased since then, but currently handling the COVID crisis, we have this credit moratorium here in Hungary, which was created in agreement with the financial institutions, and that helps a lot to keep the Hungarian economy alive. And well, they are taking their share, their responsibility in managing the crisis, and we are very grateful for the banks here in Hungary to do so, and being very, very proactive and constructive in that term. They understood they have to overtake they have to take their share of the crisis management. I'm very, very grateful for the cooperation between the government and the financial sector here now.
I think if I can just jump in, Kevin, on the back. I mean, there's one of the biggest changes which has happened, I think, over the last year as well is we've moved on from this rather archaic view of kind of sustainability as a cost, and very much now into viewing it as something which is an opportunity. And just sort of echoing, László's comments there. It's not. In the past, you might have looked at, installing renewables was much more expensive than fossils or whatever. All of those cost arguments in that industry have pretty much, disappeared now, even before we've put a cost of carbon on things. But if we start thinking about things like a cost of carbon and we start thinking about risk, then, it's economics that drive these things. And we've moved into a world where it's simply good business, right? And if we look at a lot of the consumer facing brands, as I say, to echo László's comments, it's the right thing to do, but also if what you're doing is you're building brand loyalty and you're building customer loyalty, etc., then that's good business. It might take longer for those returns to come through, but they're more sustainable returns in the fundamental sense of the word rather than the conceptual kind of sense of the word. So it comes back to that point I said right at the beginning in terms of, we're moving thankfully to a world where I think we're appreciating longer term, more stable returns, more resilient returns, rather than sort of, short term, shoot the lights out, but potentially very volatile and very, very risky things. And to pull in some of those other comments that were made as well about, digitization, we're seeing a huge joining together of technology and sustainability as well. We talked about inclusivity in banking. Clearly, education is another area where sort of online learning has the opportunity to open it up to an enormous number of people, so long as people have access to laptops or iPads or phones or whatever it may be. And that's another thing that we do need to tackle. But huge implications for blockchain. One of the biggest things people have been looking at now is supply chains, and the sustainability of supply chains. And in the past, you could hide behind a supply chain that ended up in some sort of dim, dark, distant corner of the world. But now it just takes one photo on social media and your brand can be toast, right? And your sales can go through the floor. So tracking supply chain using things like blockchain, etc., can make a huge difference. And we're seeing in a lot of the consumer brands, household personal care, things like that. A lot of consumers now are actually starting to scan products with QR codes or barcodes or whatever, and they want to see where the products come from. They want to see what the footprint is, both environmentally but socially as well. So all of this, technology is facilitating a broader inclusivity and a broader view of the stakeholder society, where things that they care about and their personal values and societal values, they can track them and they can adjust their lifestyle to meet with their own views.
So it's pretty much using what a lot of the big tech and fintech organizations are using, and figuring out how we as banks can look at this and how best to wrap it into our operating model, I guess, right? Mirela, how do you see this playing out, especially with respect to the big tech firms out there, or and the fintechs? How do the banks make best use of this?
Well, we've certainly seen quite a lot of progress. So I've been with the company now for 9 years, and I can see directly as a customer the experience has improved a lot. I think there is still room for improvement, of course, and the low-hanging fruit would be basic processes such as KYC that still take a long time, and there are many things that are not done completely digital. And again, an example would be using digital signatures consistently, because there are still many cases where we use, let's say, the old paper forms that we sign and so on. But there are many improvements. And for example, we are now looking at implementing a cash management solution that aggregates all our bank accounts in 13 countries with almost 20 banks. So it's quite a universe, quite a complex project. And just to think that we'll have real-time access to information in an aggregated manner, this is something absolutely fantastic that we probably wouldn't have considered a few years ago. Yes, I think automation, maybe a higher degree of banking processes automation would definitely work. And this would also help the focus on innovation, because also from a customer perspective, would certainly use the time that we currently spend on, let's say, more simple tasks, and be able to devote to more interesting projects.
If you allow me to add here, actually, I think everybody has seen the well-known statistics about how a transaction in a branch costs 2.5 euro, and online is, let's say, 40 cents, and on mobile it's 20. When the mass of customers were not there to use the digital channels, those were good statistics, cases are clear. But now, actually, when this number increased massively, the business cases for the fact that fintech or big tech are offering transactions to suddenly cost not 20 cents, which was kind of one of the best that the banks were achieving through their mobile and other technologies, but to cost 10 cents or 5 or even 1, now this makes a huge impact in business case, and suddenly everybody are looking how to actually leverage that that technology provided by the fintech and the big tech companies. And on the top of that, the change of the customer behavior is driving a lot of those transformations. The customers simply do expect the things to happen as they're happening in the other parts of their lives. So when they take, let me not name here usual platform, but where things are happening with one click and everything is intuitive and simply, they were not understanding why the banks cannot offer them the same kind of experience. So now these expectations are driving that change as well. It's not just the COVID, it's kind of the usual progression of things. And the biggest question to me would be where the regulations are going to play its role, because as you know, the banks are highly regulated, and all these fintech, including the big tech, are not that much. So the magic will happen when the unlimited sky of the technology kind of merged with the ethical, social, and responsible and well-accepted banking universe. I think that balance, when it's found, this is where we are going to see probably the best outcome of all these developments and adoption of what the fintech and the big techs are doing with the banks.
Thank you, Kalin. Martin, I wanted to ask you something focused on the value chain, say the supply chains. Are they the most susceptible or sustainable in a crisis? And how do you see, what improvements do you see coming out of this crisis? Any learnings that we've had from this?
I think it depends how you define the supply chain, but of course, I think it is definitely helping, to sustainability. That's true because you are able to optimize within one business all lines of your business that actually supply each other, leading down to final end customer. But it really depends on the industry, I think. So in our case, it's definitely true. Diversification in your sector, for example, in our energy sector, proved itself to be a good concept. For example, from COVID point of view, actually some of our businesses were impacted fairly heavily, especially those that supply to B2B customers. And I'm not talking about commodity, but about services, energy services. We install heating units, air conditioning units, anything that you can think of, basically, that has something to do with energy. So those businesses had definitely decline in sales. Other businesses actually did better than expected. So overall, our full year 2020 was basically where we expected it to be in January. But we could definitely see that impacts of such situations can be significant. Having actually basically owning big part of our supply chain was an advantage. But in other segments or other industries, it can be different, of course.
We're actually seeing in the world of supply chain finances, where we're actually seeing this concept of sustainable supply chain finance now, where particularly if corporates have got net zero targets and they're doing that on a scope 3 basis, it means all their suppliers and all their distributors also have got to be net zero as well. So, if there's a supplier and a supply chain that's holding a corporate back from reaching its net zero target, well then, they could conceivably even move to a different supplier, or they might offer different terms. So we are actually seeing supply chain finance terms starting to differ, and we're seeing some industry leading companies that are offering different terms to suppliers based on whether they're actually in line with the sort of, if you like, the customer corporate's strategic goals. So again, it's one of those examples where we're, instead of having sustainability there and finance there, we're actually seeing things like prices, volumes and margins start to be directly impacted by sustainability credentials.
László, do you see any potential benefits for Central Eastern Europe? And with respect to supply chains, things coming closer, perhaps?
Yeah, it was forecasted or projected by some analysts, or most of the analysts, that security of supply will increase as an important factor in choosing a new location. But the restructuring of supply chains and value chains are not as fast as it was expected when the COVID started. But I believe, and I see, and if you look at the productivity and labor cost comparisons, that Central and Eastern Europe is the most competitive region within the European Union. And we can also show some political stability, some stability in law and regulation in terms of economic policies. You can see that these countries are very reliable, and you can count on that, because in the last 30 years, I think we learned into the market capitalism after the transformation and transition. And when we look at global players, what is important for them? It's political stability of law and regulation, a large market. So these are the most important factors, and I believe that Central Eastern Europe is very competitive.
Thank you. Well, let's wrap up with a lightning round. Real quick question. How would you sum up your takeaway message in one sentence for the audience? Jason?
Sustainability is mainstream. And it's not a nice to have, it's part of the fundamental part of economics.
Mirela?
I would agree. I would say sustainability and also technology or digitalization are already mainstream. They are basic things. They are expected from every business. So it's certainly something that we need to put more focus on and also invest more time and resources in.
Kalin?
I would say technology is enabling sustainability and helping that to continue.
Martin?
I think ESG is definitely a serious thing. It will impact us for the future, and it's nothing that could be ignored. It is really important for our current business.
László?
Our way of seeking sustainability was labeled as unorthodox after 2010, but now sustainability is mainstream. And if you want to understand how we have been seeking it and how we are looking to seek it in the next 9 years until 2030, then read my book, Creating Balance, the Mission of Economic Policy.
Well done, thank you. All right, I want to thank all the panelists. You've taken a significant amount of time out of your day, and it was very important for us to have you on this panel. And I want to thank those who've decided to tune in and to listen and watch the panel discussion. We hope you enjoyed it. So thank you again, and have a good rest of the day.